What if the $100,000 sitting in your bank account could quietly grow into $4 million? Sounds crazy, right? But not as crazy as this. Most Americans will retire broke. Not because they didn't work hard, but because they didn't know how to make their money work for them. Let me tell you a story. A friend of mine, let's call him James, worked 60-hour weeks, saved like crazy, skipped vacations, even delayed starting a family because he wanted financial security. By age 40, he had $100,000 saved. That's supposed to be good, right? But here's the trap. He thought 100K meant peace of mind. But at $2,000 a month, which is below average for U.S. expenses, that savings would vanish in just 4 years. No investments, no growth, just gone. And what came next? He had to start over, with more stress, less time, and fewer options. Now here's the part that hurts the most. If he'd simply invested that $100,000 into the right index funds, that money could have grown into a multi-million-dollar portfolio, completely passively. No trading, no timing the market, no Wall Street degree, just a simple decision. Made once that compounds forever. This video isn't about hype or get-rich-quick fantasies. It's about reality. What works, what doesn't, and the exact 3 index funds that give you the best shot at turning your savings into financial freedom without gambling your future. Stick with me to the end, because once you see what just $100,000 can become with time, patience, and a proven strategy, you'll never look at your savings the same way again. Most people underestimate time, not because they don't have enough of it, but because they don't understand how powerful it is when it comes to money. Compound growth is what happens when your money earns money. And then that money earns even more money. It's not just adding, it's multiplying, quietly, patiently, relentlessly. Let's keep it real for a second. If you invest $100,000 and earn an average of 10% a year, do you know how much you'd have in 30 years? Almost $2 million. That's without lifting another finger or adding another dime. Now, what if your investment also paid dividends, and those dividends were reinvested? That number could climb even higher, into the $3 to $4 million range, depending on the funds you choose. The crazy part? Most people spend decades trying to save $1 million the hard way. But compound growth? It quietly gets you there in the background, if you start early and stay in the game. This isn't about magic, it's about math. But the kind of math that makes freedom possible. All right, let's simplify the whole thing. An index fund is like a big fruit basket. Instead of buying just one apple, aka one stock, you're buying hundreds of fruits from the entire store. Apples, oranges, bananas, everything. So if one fruit goes bad, no big deal. You still have the rest. That's what an index fund does. It buys small pieces of many companies at once. So instead of guessing which single stock will explode next, you're betting on the entire economy to grow over time. And guess what? It usually does. The U.S. stock market has returned about 10% per year over the last century. That includes the Great Depression, the 2008 crash, and even the pandemic. With index funds, you're not trying to beat the market. You are the market. Low fees, no stress. Set it and forget it. It's not sexy, it's not flashy, but it works. Now let's get into the good stuff. The first fund in our lineup, Vanguard S&P Small Cap 600 ETF, ticker symbol VIOO. This fund focuses on smaller companies, the underdogs, the ones you probably haven't heard of yet. But here's the deal. Small caps grow faster because they have more room to run. Think of them like startups that are about to explode. Historically, small cap stocks have outperformed large cap giants over the long term. Yes, they're a bit more volatile. But if you've got time on your side and you're not planning to cash out next year, that risk is often worth the reward. VIOO holds 600 of these small companies across different industries, which means you're not betting on just one underdog. You're backing hundreds. That spreads out the risk while keeping the growth potential strong. And here's where it gets interesting. The average annual price growth of this fund is around 7%. Plus, it delivers a 1.47% dividend yield, with dividend growth of over 11% per year. What does that mean for someone like you or me? Let's say you invest $100,000 and just let it sit. After 10 years, you're looking at around $233,000. Fast forward 30 years, that investment could grow to $1.68 million, paying you nearly $6,000 a month in dividends alone. That's the power of time, patience, and picking the right kind of risk. VIOO isn't about quick wins. It's about planting seeds now so your future self can harvest the rewards later. Number 2, Wisdom Tree Use Value Fund, WTV. Now, if VIOO is the energetic young athlete, WTV is the wise, steady marathon runner. The Wisdom Tree US Value Fund focuses on what's called value investing. Think of it as buying great companies on clearance. You're not looking for the next hot tech stock. You're picking solid, established businesses that the market has temporarily undervalued. This fund isn't about speed, it's about resilience. While the world chases shiny objects, value investors quietly accumulate shares of companies with strong fundamentals, good earnings, low debt, steady customer bases, and wait for the market to catch up. WTV's strategy is powerful, especially during turbulent markets. When things get rocky, these types of companies tend to fall less and recover faster. Here's why this fund is underrated but seriously impressive. A 1.49% dividend yield with a lot of room to grow, an impressive 12.69% dividend growth rate, and an average annual price growth of 9.77%. So what happens if you invest $100,000 in WTV? Over 10 years, you could grow that into $296,000. Fast forward 30 years, that could reach around $3 million with monthly dividend income of over $7,700. Enough to replace most full-time incomes in America. This is the fund for people who like sleeping peacefully while their money works overtime. Number 1, Fidelity Total Market Index Fund, a FSKX. If you don't want to choose between small cap speed and value stock safety, here's your all-in-one solution. Fidelity's Total Market Index Fund, ticker FSKX. This is the most diversified fund in the lineup. It covers the entire U.S. stock market. Large caps, mid caps, small caps, you name it. Tech, healthcare, manufacturing, finance, energy, it's all in here. This fund doesn't bet on any one sector or size. It bets on America. And when you look at the last 50-plus years of market performance, that's a smart bet to make. Here's the data that matters. An ultra-low expense ratio of just 0.02%. Basically free. A healthy 1.97% dividend yield, a solid 12.13% dividend growth rate, and an impressive 10.53% average annual return. Now let's dream a little. You invest $100,000 today in FSKX and leave it alone. In 10 years, you're at around $329,000. In 20 years, that balloons to $1.1 million. And by year 30, you're staring at nearly $4 million. That's not fantasy. That's math. FSKX gives you growth, income, and insane long-term potential, all in one fund. And it's my personal favorite for anyone who wants a one-and-done, set-it-and-forget-it portfolio. Let's get real for a second. I wasn't born into money. I didn't grow up learning about compound interest at the dinner table. In fact, like a lot of you, I used to think saving money was the goal. That if I could stash away $50,000, $100,000, I'd be set. But one day, something clicked. I ran a simulation. What if instead of just saving, I invested $100,000 into smart, diversified index funds? What if I didn't chase trends? Didn't try to time the market, just let it grow? I tested real data, backed by history, and ran 3 paths. VIOO, small caps, high growth. WTV, value stocks, strong fundamentals. FSKX, full market exposure built for balance. And the numbers blew my mind. Over 30 years, my $100,000 didn't just double or triple, it multiplied. Across the board, we're talking about final portfolio values between $1.6 million and nearly $4 million. What shocked me even more? The monthly dividend income. At the high end, we're talking about $9,000 to $10,000 a month. That's not just retirement money, that's freedom money. That's coast on the beach, buy back your time, spend it on what matters kind of money. And here's the best part. I didn't have to be a financial genius. I just had to start. If I could go back in time and give 30-year-old Mike one piece of advice, it would be this. Don't wait. Start now. Start small. But start. Because time is your greatest investment partner. By now, you might be thinking, Mike, this is amazing, but I don't have $100,000 sitting around. I get it. Most people don't. I didn't either when I started. But here's the truth most people miss. You don't need six figures to build wealth. What you need is time, consistency, and a strategy. Let's say you can only invest $50 a week. That's a dinner out. That's 2 Uber rides. That's 1 Amazon order you could skip. If you put $50 a week into a low-cost index fund like FSKX and kept doing that for 30 years, do you know how much you'd have? Over $500,000. Double it to $100 a week, you're knocking on the door of $1 million. The point is, it's not about waiting until you have more. It's about starting with what you have right now and letting time do the heavy lifting. The earlier you start, the less you need to invest. That's the cheat code nobody teaches us in school. So stop thinking in terms of, I'll invest when, and start thinking, what can I do this week? Let's zoom out. Right now, we're in a world of uncertainty. Rising prices, job instability, economic swings. It's easy to feel like the game is rigged. But here's the thing. The rules of the money game haven't changed. Only your strategy needs to. Every day you wait is a day your money isn't growing. Every paycheck you spend entirely is potential freedom you're giving away. Do you know what separates people who retire free from those who work until they can't? A plan, a decision, and a start. This isn't about becoming a millionaire for the title. It's about having choices. It's about never feeling trapped by a job, a paycheck, or a broken system. Index funds aren't glamorous. They won't make you rich tomorrow. But over time, they can build you a life most people only dream about. And the best part? You don't need luck. You don't need perfect timing. You just need to start. Look, I started Golden Goals because I was tired of watching people get left behind. Smart people. Hardworking people. People who deserved better. Just like you. If you've made it this far in the video, you already care about your future more than most. And that alone puts you ahead. But don't just be someone who knows what to do. Be someone who does something with it. Whether it's $100,000 or $50 a week, whether you're 25 or 45, your financial freedom starts with a decision. So here's my challenge to you. Open an investment account today. Research one of the funds we talked about. Commit to just starting, because your future self will either thank you or wish you had. And hey, if you found this valuable, share it with someone you care about. Let's build a generation that's not just surviving, but thriving. This is Mike from Golden Goals, and I'll see you in the next one.